and welcome to Next Gen Finance, an SEB podcast about sustainable finance. My name is Lina Apsheva, I am your host, and today I am joined by Anette Andersson, Senior Sustainability Investment Specialist at SEB Asset Management. Annette was on the podcast a little over a year ago, actually, and we talked in detail about what SEB Asset Management is. So if you haven't heard that episode or are not familiar with SEB AM, I recommend that you listen to that episode first before this one. But in this episode, we're actually going to focus on the company's annual sustainability review and the numbers and initiatives that are highlighted there. So Annette, welcome back to the podcast. Thank you so much for being here.
Thank you so much for having me back. It's great to be able to talk about these things because I think that there is so much information now in society that you get lost.
Definitely. And if we look then at the sustainability review for SEB Asset Management for the year 2025, let's start very broad. What is your impression? Are you happy with the results?
I wouldn't say happy, I would say proud. We do a lot, but of course we can do a lot more. And the thing that I'm happy about though is that we get a chance to try and tell stories to our clients what the impact actually is of the investments that we work with, because I think again that everything gets lost in numbers, but you need to hear the stories what the real impact is behind the numbers, and this is a great opportunity for us to be able to show some of that.
And that's exactly what we'll try to do here today. So if we look at the very first number and probably the biggest number that we're met with when we look at the sustainability review, that is 944 billion Swedish krona, and this is assets under management in SEB labeled mutual funds. So could you break that number down for us, especially from a sustainability perspective?
Yes, I would say that nearly 50% of that is invested in equities, about nearly 30% is in fixed income, and then we have what's called alternative investments, which is private equity, real estate, infrastructure. So the main part is in equities, listed equities, I would say. And we are fortunate that we are in Europe, so sustainability is quite important to us. So 96% of the total amount is actually in where sustainability is actually integrated into investment processes. We do have exclusions, which all of this 944 billion SEK is actually taken into account. But the majority is actually also integrating sustainability into the investment process, where we actually can prove and show and push companies to become better. And being on the equity side as well is really important, because if we own the equities, we are actually owners of these companies. So we do have a voice. We can vote at the AGMs, for instance, where if you own fixed income instruments, there is no annual general meeting and you can't vote. But when you do hold the equities, you are allowed to have a voice.
And I'm glad you mentioned equities, and equities being the biggest chunk of these assets under management. If we look a little bit closer at that category, we see that more than half of these equities are defined as sustainable investments according to SFDR, the Sustainable Financial Disclosure Regulation. Could you break that down for us? What does that actually mean?
It actually means that the EU Commission has decided what is deemed sustainable. So it's not that something that we came up with or here in the Nordics. So it means also that it's comparable, first of all, to other peers, so that the investor or our clients can actually go in and see these numbers and things are judged in the same way. And it also gives us makes us more sure of what we're actually doing or in the right way, because this is deemed by the EU Commission. And I think it shows progress, even though I understand and fully agree with that the frameworks and the regulation is quite complex. So I think that if you can see that these numbers are actually increasing, which they are, which means that the EU Commission, what they aimed for with this regulation was transparency, and also that we have to redirect investments to become more sustainable. So I think this is a very clear way of how we can show that even though it's a very complex framework to work with and can be really difficult to understand sometimes.
And then if we keep looking at the numbers in the review, I think another quite notable one is the almost 60% reduction in the invested Scope 1 and 2 greenhouse gas emissions since 2019. So could you take us through this reduction process? And you kind of mentioned a little bit about the different sustainability-focused activities that you do, but what kind of measures are actually behind this big reduction?
We use, like everyone else, I would say, the greenhouse gas protocol, which is a global standard on how to measure emissions. And Scope 1 and 2 are for the company's own production or the electricity and energy that they use themselves, which they have full control over. So we measure them, obviously the companies measure them, and we track that. And we did join the Net Zero Asset Manager initiative in 2021 with a baseline year, as you said, 2019, where we are working to become net zero by 2040. And since our own operations doesn't have that much of a climate footprint, we need to really work with the companies that we invest in, because it's their journey that we have to sort of like push them further so that we can reach our goal. And this is something that we track. Obviously, the reporting is very important, but also that we are pushing companies to have approved or committed science-based targets, which means that they have a credible plan on how they are going to reach the Paris Agreement, and then that's verified as well. So it's not just something that they can say that yes, in 2040 we'll be net zero, but we can't see that they're actually investing in that way. So that's something that we're really pushing for. And obviously high emitting companies are slightly more important in that case than companies who are maybe not have production or anything. So also it has to come from what's material. But this is something that we're working all over, including in the private equity space, where we are pushing small companies also to become net zero and have some science-based targets.
Mm-hmm. And you said a couple of times that you actually push companies to certain actions and to participate in certain initiatives. We talked a lot about active ownership in the previous episode where you were a guest, and then you mentioned, for example, that you just came back last night from another city where you attended a general meeting of another company that you invest in. So, I mean, it's undeniable that you play a very active role in these companies' development, and you also have your own goals of how these emissions need to reduce. But I'm wondering, how do you find the balance between kind of pushing companies enough to reach the goals, but also keeping those relationships and keeping the opportunity to continue influencing them?
Yeah, it's actually becoming easier, because a lot of the companies now have realized that emitting CO2 is actually a cost. And every company works with the cost base, obviously, and want to reduce that. So when they've made that connection, that it's actually at the end, the bottom line is actually being affected by being high emitters, they want to reduce. And we're fortunate when in Sweden, at least, or I would say in the Nordics, where we have so much renewable energy. So for them, it's not so difficult. It's a lot more difficult when they have production outside in Europe or in Asia, where the availability of renewable energy is less. So I think that is an easy question. And also, all companies, including SEB, wants to be attractive for investors. And investors look at these things. So to become a more investable company, they understand that this is something that we want to. And we are happy with companies being in transition. So it's not that they have to cut everything right now, but they have to have a credible transition plan on how they're going to do that. And that's, I think, where we can work with companies and give them the confidence to say that, yes, we understand you are high-emitting companies. Yes, we can see you have a credible plan. We will stay on. We will work with you. We can share best practice. Maybe someone else in the same sector that we're having the discussions with, maybe we can share that with them so that they can leapfrog on their own transition. So I think environment or engagement climate is very friendly. Obviously, we have very specific things that we want the companies to do, but it's a collaboration. And even if a company says that, yes, we're going to reach X, Y, or Z next year, and they don't, we'll just have that discussion with them and say, okay, why? What happened? Are you going to come back on track or something? So it's not that if they misbehave, we'll just bash them. Because we want to, obviously the companies who are already very, very good, they've already done the journey or are on the journey, but we can help the companies who are moving in that direction and try and help them with, okay, what's the first step and what's the second step? And I think that the whole financial market here in Sweden we're very good at doing that, to collaborate with the companies that we invest in.
Then if we look at funds in general, I think for the past, I don't even know how many years, whenever we talk about funds and their sustainability classification, which funds are sustainable and which are not, then we always mention Article 8 and Article 9 funds. And we see also that those terms are used in the review as well. There are 25 billion Swedish krona currently invested in Article 9 funds in SEB Asset Management. And that means, of course, that these are funds that have sustainability as a focus according to the EU classification of funds. But this classification is going to change soon. And apparently we're not going to be using these terms that we have been focusing so much on in these discussions moving forward. So tell us a little bit more about this change. What do you think, and how is this going to affect your business?
I think it's necessary because the Article 6, 8, and 9 doesn't make sense to anyone who's not in this particular field. So I think that's very good. And I think also that the EU Commission, when they did the classification initially, it's a reporting requirement, not so much on how you actually include sustainability into your processes, but the market has taken it as such. Because even Article 6 or unclassified funds can have sustainability in them. But depending on if they're 6, 8, or 9, there are more and more reporting requirements. And if we talk to customers saying, yes, you should have an Article 8 funds, that means nothing. But if we can say, well, yes, you're interested in being invested in transition. Yes, that makes more sense. So I think it's really good. And I think also we have to take into account that the financial reporting has been around for more than 100 years. Sustainability reporting, is it 25, 30 years? So it's still very, very young. So it will continue to evolve going forward. And I also think that the regulation, it went a little bit too far. And now it's stepping back, and my personal view is that they're stepping back a little bit too much, but I think maybe they're doing that because enabling more to embrace the framework. I'm quite unhappy that the scope of companies that have to report this, CSRD for instance, the other regulation, is not really helping us, because we need the numbers from the companies, because if we're going to change the direction of where the world is going, we can't just say that, yes, the reporting burden is too much for these companies. We still need the numbers.
Well, first I have to say it was extremely reassuring to hear you say that Article 8, 9, that whole classification doesn't make sense, because if anyone else has been as confused as me about how to approach this question, then to hear it from you, who is the biggest expert I know in this area, is actually bring some confidence back to myself on the topic. But if we come back to then the question of regulation and kind of the different requirements and the different frameworks that you can apply to your work, I think it's difficult to not mention the Net Zero Asset Managers Initiative. And together with the Net Zero Banking Alliance, this initiative has undergone some massive changes and earthquakes, I guess you can say, in the past year. So what do you think about these developments and, the initiative kind of stopping for a while and then restarting its work again?
I think it's a It comes from the what's happening in the US, where sustainability and the current administration is not very pro sustainability at all, and that they pushed a lot for asset managers and asset owners to step away because they felt that sustainability was not creating value, which we think is unfortunate. So on the Net Zero Asset Manager initiative that we joined, a lot of the larger American asset managers joined as well. But being pressured from the administration meant that they actually decided to step back. I can understand that, even though I think it's very unfortunate. We have recommitted our commitments to become net zero, so we are staying on track. And I think what I hear is that most of Europe and the Nordics, we are still going to continue working, but to have the largest asset managers in the world also in the organization gives us a lot more power, or had more power than we do now. But we are still continue to work, and I think it's an unfortunate fallout from the administration in the US. But nothing lasts forever, not even bad times.
Yeah, I think we all need to hear a bit of the optimism there. So thank you for that as well. And I'm wondering then if you could give us a little bit more insight into your collaboration with your both other European and the American partners. I know that you work closely with other asset managers as well. So how have these discussions kind of changed, or are you continuing to collaborating as usual?
We are still collaborating. I wouldn't say as usual. It depends on where the actual peer is situated. I would say that we continue working a lot still with the European ones and the Nordic ones, a little bit more careful on the US side if they're US based. And I understand that from their point of view, it's mainly a business decision because they get hurt if they don't comply with the administration. But the companies themselves say that they are still working as much as they did previously, but they're not just as vocal about it. And maybe we just need to change the narrative and call it not sustainable, call it strategic or something like that, and then it wouldn't be an issue. Because I think that the word sustainability and sustainable is polarized now. Either you're black or white, and that's not what it's all about. So I think that maybe we need to maybe change the wording. Because I think any company, regardless if you're producing products or if you're an asset manager or asset owner, you want to be efficient, you want to create value, you want to minimize your risks. And that's exactly what sustainability is. But it's also strategically what a company should do. So yeah, maybe we should change it to strategic instead.
Speaking of different areas within sustainability that maybe go by other names, actually on the day we're recording this is the 100th birthday of David Attenborough. So I think it's important that we honor him by talking a little bit about nature and biodiversity, and our listeners know that's a very important topic for me as well. And you at SEB Asset Management have actually had quite a few different developments in that area. In the past year, so Nature Action 100 status report and then the BLM investor statement on rainforests are two initiatives that I mentioned in the sustainability review. Could you tell us a little bit more about them, and why is this a topic that is important for you?
It is important. I mean, we talked a lot about climate and we've come around how to measure that with the greenhouse gas protocol and everything. And we know that we are so dependent on biodiversity, but not being really able to, how are we going to address that? How are we going to tackle it? And the way business today is structured, it's so many different layers of suppliers. So the companies themselves don't really know what are their dependencies on biodiversity, apart from that they know that it's important. So these initiatives means that we're trying to track, we're trying to measure, and we are addressing these and telling companies that we feel that this is really important, that they need to address this issue. We have actually been engaged for quite some time in another initiative called IPDD. Sorry, I can't remember quite what this is called right now, but where we actually have had engagement with the Brazilian government on the deforestation of the Amazon, because that needs to stop. So we have been engaged for quite some time, and I think that now that maybe it's also because the area of sustainability is becoming more mature that we are able to address the next issue, because there are so many issues and we can't address them all at once. So we need to sort of be careful and focus and balance on what is really material and how can we make an impact and a change.
And another area that is not less important but has probably gotten even more attention, I would say, in sustainability circles is, I think, social sustainability, especially considering the different social crises that are happening in different parts of the world. So I'm wondering, is this a topic that you have looked at in any way in the past year?
Yes, we have and we are. I don't know if I mentioned it last time, we actually do a client survey, an annual client survey, where we ask the clients to pick 3 of the UN Sustainability Development Goals. And we've done that for 9 years, and all of the 9 years, climate action and water has been the 2 most important ones. But now I can see that the social factors are becoming increasingly important. It's not that environment is not important, but we can see that they're actually growing in numbers. And I think, just as you said, we see war, we see famine, we see crisis, what's happening in Gaza, what's happening in Ukraine, what's happening in Iran, and that is affecting people, and it's becoming more top of mind. Because I think we are, in a sense, quite simple creatures, and we can't have too many things in our heads at the same time. But when things keep popping up, that's something that we pay attention to. So we are working with that. I mean, we do have our microfinance funds where we enable entrepreneurs in developing countries to grow their business. We are trying to invest more in what's called social bonds. I mean, we have the green bonds where the produce is for green investments, and we're working on the same on the social side, and that is a growing trend even in Sweden, where we try to get hold of them. So it is really important, and it's everything from areas with a lot of unemployment here in Sweden, or housing might need some extra love and tender care, to what is actually happening in the world with the wars actually. That we are suffering right now, and people are suffering really.
Very important, and great to hear, of course, about the different initiatives that are unfolding in that area. So we talked about emissions continuing to play an integral role in the transition, and then nature and social issues. Are there any other themes that maybe stood out to you? And also moving forward, do you think that these themes will continue to be important?
They will obviously still be very important. And I think coming back to where we are in the world right now, that we are looking the geopolitical situation, it's changing in the world right now. And I think that Europe as a whole, including Sweden, we need to be more resilient on outside shocks. I mean, we can see now what the war in Iran has caused the world in pain and higher prices. And I think that we need to work a lot more, and I think that also if we can be more resilient, even or if it's only on the energy side, not being so dependent with an oil price that is going crazy. If we have enough renewable energy in our part of the world, we will stand firmer in our society.
Great to hear. Anette, thank you so much for joining me in the studio today and providing your very valuable insights. It's always interesting to hear what you're working on. And thank you to our listeners, as always, for tuning in. Please make sure to subscribe or follow the podcast, depending on which platform you're listening to. That way you will be updated whenever new episodes come out. But for now, take care and goodbye.